Hi, and welcome to another episode of IC Data People. We're here with the founder and CEO of Quiver Quant. James, welcome to IC Data People.
Hi, thank you for having me.
Well, James and I met shortly after he launched Quiver Quant and was gaining traction rapidly among retail investors in the Reddit community. I was so impressed by his approach to bringing institutional investor quality data sets and insights to the retail investor community that I actually invested in Quiver Quant. So I'm a little biased on this interview. I should say I invested in a company run by a couple of young guys with limited experience in the asset management industry, in part because my thesis was that limited experience would give you guys a fresh perspective. And given that you've got this unique vantage point on really what influences both retail investors and the institutional side, I'm curious how that's really shaped how you build and launch data products for Quiver Quant.
Yeah, definitely. Yeah, I think that that's definitely been, in some ways an advantage and in some ways a disadvantage for us. The fact that we didn't come into this company with a lot of institutional experience. Myself and my co-founder were both students at UW-Madison at the time we started the company. And I think one of the ways that's really helped us is that we're both kind of coming into this space from more of a perspective that's in line with the retail investor, where I think we have a fairly good understanding of first of all, what retail investors care about. There are some alternative data sets out there that are really useful for institutional investors, but just aren't as relevant, aren't as digestible, aren't as important for a retail investor who's trying to get insights from alternative data. So one of the areas that I think we've had an advantage so far is just having a good understanding of what retail investors really care about, and then also what stuff is actually usable and you know they can actually start applying to their own investment decisions.
Super interesting. And I'll ask another question about what's the biggest challenge you face when you're productizing data?
Yeah, I guess that kind of plays into it as well, where we're trying to serve a fairly wide variety of people. Retail investors is a broad term, but really it describes a lot of people with very different backgrounds in terms of investing experience, in terms of how actively they're managing their investments, in terms of what type of assets they're looking to invest in, and then also the style that different people are approaching their investing. So, we have some users who are very much on the quant side of things, where maybe they even have a background in data science already, or they have a background in finance, and they're very well equipped to use alternative data and start applying it to their own investing decisions. On the other hand, we have people who are brand new to investing, some people who aren't even investors yet, who don't really have come equipped with a toolkit where they know how to start taking these data sets and start applying it to their own trading. So one of the big things we've had to figure out is how can we make a product and how can we make a platform that effectively serves people on both sides of the spectrum. So thinking about, how can we take data sets that may be very complex, but present them in a way where even someone who doesn't have any background in data is still able to get interesting insights from them and start seeing trends in the data and start figuring out how they can come up with investment ideas based on what they see going on. At the same time, we still want to offer products that have complexity for people who maybe want to, look at the raw data that we have available and do their own analysis, like import it into their own trading algorithms they've set up. So really part of it's thinking about how can we tailor our marketing around this? Like how can we make it so that when we're sharing these products with people, we're not just appealing to people who are already very familiar with the terminology and with the tools that are on the professional side, but I guess also making it so that when people actually onboard the product, they have a simple enough time figuring out how they can start using the data that we provide.
James, you alluded to the idea of having multiple data sets and different audiences for those data sets. I'm curious, you personally, how do you think about what makes data most valuable? And does that differ from what different client types might consider most valuable? And why might those be the same or different things in different instances there?
Yeah, I'd say one of the things that's most interesting about alternative data when it comes to investing is that I think every data set you look at kind of offers a unique perspective from which it might be possible to find alpha. If you're only looking at a company's fundamentals that they present or only looking at like news stories about a company, obviously there are some insights you can pick up from that you can take a differentiated viewpoint on where you may have a different idea of how a company's current financial situation is going to impact their future going forward. That may allow you to place a differentiated bet in terms of the trades that you're making with that company. But the less information you have access to, the less different, I guess, perspectives you have that you could possibly find a differentiated viewpoint. So what alternative data does is it really expands the scope where people can find areas that are more well fit and I guess more up their alley in terms of finding a really unique perspective where they may have a better idea than the market of what's going on within a company or how something that's going on may impact a company going forward. I think one of the areas where alternative data can be really useful for retail investors is that I think a lot of retail investors, if you ask them to analyze a balance sheet, they're probably not going to do a better job of it than someone who's working on Wall Street who has been analyzing balance sheets for their entire career. They're probably not going to be able to find alpha through that method the same way that they may be able to find alpha if they're looking at something that's more well suited to their interests or more, in line with something that they may be an expert in or may think a lot about. Just for an example of that, like some of the social sentiment data sets we provide, I think have been really helpful for some people who almost maybe like experts within certain social media communities where your average retail investor may be very well suited at analyzing data around what's going on Wall Street bets and figuring out how that's going to be impacting companies going forward in a way that they wouldn't be necessarily if you gave them financial information and asked them to interpret that. So really, I think like the more information people have in front of them, the more angles they can look at in terms of finding alpha. And I think that's, one of the reasons why expanding information access to retail investors is really important.
Looking at a lot of multiple data sets under one place is a very difficult job to do. So my question is, how can multiple data sets be combined together to complement one another? And can they actually do that?
Yeah, definitely. That's actually one of the areas I think it's most valuable, or I guess one of the most valuable ways of using data is when you're not just necessarily looking at something from a single perspective, but when you're actually threading together multiple different information sources or multiple different data sets to come up with something that's really unique that maybe a lot of other people haven't really considered or haven't really looked at. I think definitely there are some areas where it works better than others. I guess looking at Quiver as an example, we collect a lot of data sets in the government space. And those data sets oftentimes present really interesting insights when they combine with each other. Like one example is we track congressional stock trading. So, anytime members of Congress are buying and selling stocks, we are able to present that data. But then we also present data on government contracts and corporate lobbying. So one example of a way you can combine those data sets together is you can look at like all of the current legislation that's being proposed in Congress and then see what companies might be lobbying to pass that legislation, whether those companies are currently receiving government contracts, and then also whether members of Congress have taken their own bets on or against those same companies. So I think that in some instances, just looking at a data set by itself presents some interesting insights, but I think where you can really get more complexity and really, uncover some things that maybe the market hasn't already priced in is when you start combining these different data sets together and seeing what you can do with that.
Super interesting. And twist this around a little bit. What is your most controversial opinion?
Yeah, I'd say the idea that just democratizing access to investing for retail investors I would say, isn't necessarily a net positive in and of itself if you're not also giving those investors the tools to actually, perform better than if they were to just put their money into like a mutual fund or like a long-term investment vehicle that they would have done otherwise. I think that there's been a lot of push in the last decade or so to give more people access to really active stock trading. And I think a lot of people have gotten a lot more actively involved with, trading more aggressively than they had before the rise of things like Robinhood. And I think some people, I think it definitely has been a positive. I think a lot of those people have taken a very educated approach where they think closely about what stocks they're putting their money in and they do the research before making their investments. But at the same time, I think there could be a lot more improvement made on that front where you're not necessarily just giving people access to this whole world of investing and then telling them to go out there on their own and do it if they want. I think that a lot of the brokerages that are out there could be doing a lot better job of integrating better information, integrating better data, having better learning tools available. So you're not just throwing people out to the sharks and having them, be putting their money in an aggressive trading strategy without really knowing what they're doing.
James, you've probably got your fingers on the pulse of the retail investor community as well as anybody does. Forecasting 5 years out in the future, what's going to change in the data world, in the retail investing world, how retail investors might be using that data? Tell us what the future looks like.
Yeah, I'd say kind of a continuation of my last point. I think like it's just going to be more and more tools available that are available to retail investors. I think that right now, if you look at like your average retail investor, like if someone wants to get really deep into actually stock trading, typically what's being used the most by these people is things like technical analysis, or maybe in some cases actually looking into a company's financials or fundamentals. But even that I think is probably less, less common than just like purely momentum based or purely technical analysis based analysis. So that's something I definitely think is going to change in the coming years. I think that more and more retail investors are going to have Wall Street quality information, Wall Street quality data and news available to them. And I think that there's definitely going to be a pivot towards these millions of investors using the same sort of research tools that are currently being used on Wall Street versus what they currently are using, which in my opinion is like several decades behind the current state of like how people are making trading decisions in the professional world.
So James, I'm going to press you on that one just a little bit more. Do you think that in the next 5 years, retail investors are going to have the same kinds of data tools that professional investors do, or do you think it's going to take longer than that?
Yeah, I think 5 years is probably a bit optimistic, and I think it always is to a certain extent going to be a game of catch up because obviously the professional investing world is evolving very quickly too, and there's always new data sets or new investing techniques that are being developed by the professionals. But I do think there's going to be huge advantages or huge advances made in the near future, even outside the world of data. I think there are other investment techniques like, using things like expert networks, which have become very prevalent on Wall Street, but expert networks, for example, still are just completely unavailable to any retail investors, anyone who doesn't have tens of thousands of dollars to be spending on a phone call. So yeah, I think it's definitely, that divide is going to be closed substantially in the near future. I think just due to the fact that retail investors don't have millions of dollars to be spending on all these tools. I think there's always going to be some divide, but it definitely doesn't need to be as wide as it is right now.
That's great. James, thank you so much for joining us on IC Data People. It's been fantastic to have you.
Thank you, James.
Thank you for having me, guys.